Welcome to the Cattle Call. This week's edition, we are broadcasting on location at the U.S. Meat Export Federation's spring event taking place in the great state of Minnesota. Lots of craziness going on in these markets, as we well know, and we're going to talk about cash is king. A little bit of thought about negotiations, or you have those deals in place. How does that all factor into what you're seeing? We've also seen the fact that the dip has been taking place in the grain prices. How much stress or strain is it roller coasters is it putting on our feeders? Lots to look at today. And as you can see, I mentioned him, Brad Kooima joins us once again. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. Of course, Joe filled in for you last week, did a great job. But as we look, cash is king. Let's talk about what's going on in this market today, Brad.
All right. Sounds good, Susan. Thanks for having me on. And a shout out Skoll here with my Vikings here. Right. Anyway, so where I am is about, 20 miles from the Minnesota border. So, yeah, I have been cursed my whole life with being a Vikings fan. We go to a lot of the games. So, maybe one day we'll get to hang the flag up. I thought really today, your lead in here talking about cash is king is spot on. The last week was different in that not so much, the South was going, I think people said, well, you got 180 in the North, which was 3 higher. Okay. So I personally sold cattle last week for 180 to 3 different packers, felt really good about it. There was 177 the week before. So 3 higher. But and the South was steady at 170 because whatever. Okay. Well, I'll get into that later. The fact that it wasn't 2 to 3 lower. You got to remember, you're dealing with a futures market that's discounted structure like it is. The market's telling you that their expectation is that you're going to get convergence with cash and futures. By the futures sitting here and the cash coming down to meet you, well, then the cash has to consistently coming down to meet where the futures are. So I thought last week the hint was, well, when the North was higher, and even though the South wasn't higher, it was at least steady. It kind of a stop the bleeding kind of a trade. But then coming into this week, that when I looked at the show list and I looked at the kind of supply that we have in the North, which is, if you're not in the North, I think you are grossly underestimating just how tight things are here. We were pulled forward. We started getting pulled forward already last spring and summer when corn got so high. Then it was extremely hot, and we had a chance to maybe sell some cattle. It actually worked a little bit. And then we had an absolutely horrible winter. Pull forward. Well, these calves that normally are ready in April and May aren't. And if they are, they weigh 200 pounds less than the yearlings that we just, that we sold here a month and a half ago. So, 181 early to a regional. Then we went to 182 bids to 2 of the majors, then 3. And now I'm mostly getting passed in my backyard. And now the best I've heard is some 183 from a regional. So, we got them on the run. It's really fun. Not very often you have this kind of leverage.
I would say it doesn't happen very often. Before we talk about that leverage side of it, what about the South? $1 higher right now for them.
How about that? All the way up to 171. Wow. Huh? Good for them. Yeah. Too bad they don't negotiate a few of their cattle. Maybe they'd be able to figure out a way to get a little more for them. Just saying. Yeah, they were 170, and I know I'm supposed to be polite, so I'll try. There was a little bit of 174 out of Kansas to go north to a regional, and they're gonna, somebody down there will say, yeah, well, it's supply, Brad. Yeah, sure. They've got a few more cattle than we do on a relative basis, but to me, I still think anyone that believes that when you tighten that leverage a little bit, and when you get a packer or 2 that don't have that supply of captive supply cattle, turn-in cattle, call them what you want, and they have to actually participate in the market. Certainly that's been black and white apparent here in the North this last several weeks.
Well, you talk about that. Let's talk a little bit about the fact that negotiation and all that happens and the difference that we're seeing between the North and the South. From your perspective and the producers that you deal with on the North side, having these discussions on cattle prices obviously has got to be coming out better for them at this moment.
Well, to me, if it's not apparent, and for some, of course, this is the fight I've taken to every level that'll stand still to listen to me for 10 years. The need to maintain negotiated cattle. So no one's going to convince me that it doesn't make a difference. And I can appreciate that the line is very fine. How many does it take? The difference between too many and not enough is very, very thin line. And if COVID didn't show you that, then if the Holcomb fire didn't show us that, To me, do we have to negotiate all of these cattle? Of course not. Do we have to do 50%? No, I don't even think that's it. But there has to be, there's a sweet spot there where you have to keep the packer honest. And when he has to compete with each other, that's better for the producer. I'm not worried about the packer making a living. He's going to do just fine. If you look at the number of negotiated cattle totals here the last couple of weeks compared to the formula cattle, particularly in some regions, okay, and I have to be a little bit sensitive, but particularly in some regions where there's a big difference, that to me is the difference here, because those packers then have to participate in the cash market more than they would like to, or more than they had been previously, at least. So I know I'm talking nitpicking stuff that maybe is over some people's heads, but this is important. This is important if the next generation wants to keep feeding cattle in Iowa and Nebraska, in my opinion.
Well, as we wrap this up, let's talk about these grain side of it, because we've had such a roller coaster in these prices. How's it taken on the feeder side?
Well, we went through a spell there on the corn where, and traders, futures traders, and I'm the old guy, right? I mean, every year this is like this, and I don't like weather markets. They drive me nuts, because tomorrow's forecast could be 180 from what today's was. And that is a little bit of the story today. A couple of days ago on Monday, we had the first less than ideal forecast. We'd gone through 3-4 weeks there where, hey, we're going to get a window to plant, and then it's going to rain, and it's going to be, everything's going to be balloons and rainbows, and everything's fine, right? And then Monday it was like, wait a minute, doesn't look like there's any rain in the forecast for parts of the Corn Belt, particularly the Eastern Corn Belt, for maybe 2 weeks or maybe even a little bit longer. And that's what triggered the rally. That hurt the feeder cattle there for a while, for sure. Now, like today's noon forecast, and there's about 4 different ones. Okay. So, but some of the ones that we follow, a couple of them anyway, all of a sudden back kind of that inflammatory forecast down a ways to saying, well, maybe there's a shot here in 10 days that we could actually see a front come through and pick up a little bit of moisture. So, that took us way off the highs. Corn was up a couple on the new crop, but no runaway for sure.
Lots of great things. We'll see what next spring brings. Of course, hopefully folks will be hitting the grills this weekend.
By the way, weather,
yes,
and connection to that question, it looks like the weather on a scale of 1 to 10, weather on the eastern U.S. is going to be a 9. Let's go out there, grill a steak, lock and load, and we'll see if we can get this thing higher next week.
All right, sounds good. We'll catch up with you next week.
Sounds good.
Brad Kooima has been joining us. Of course, I'd like to thank the folks at the USMEF for the great opportunity that we have here to be able to broadcast from the media room here at the conference that is continuing through Friday. And as we always remind you, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.